Hi guys, welcome back. Wow, I'm speechless right now. So I'm out of words to describe the market these few days or recently. So just watch this clip. If there is no words to describe the market right now, then there you go. Up, down. Again, it jumped up, spin around, hang in there, and then do a huge diving. So I thought this is perfect to describe the market right now. Big jump around in the morning and huge diving, almost like 90-degree. Continues after market too. And this is bad because it gave a really big bull trap in the middle of the day, actually majority of the week. So a lot of people are trapped there. We can just take a look at QQQ. See, the aftermarket continue dipping, and this is because of the Netflix earning. We can get into that later. So if you have been holding Chinese stocks like me that have a large chunk of portfolio in China, you probably would find this quite familiar, that it was what happened last year. All the Chinese stocks just were free falling. And still right now, a lot of people still comment and say that I should stop recommending any Chinese stocks. They are all trash, they're all garbage. The CCP control everything and you cannot make money, blah, blah, blah. And put all the money into the US stocks instead. And I think most of them refer to the NASDAQ or the QQQ stocks, the big techs, the FANG, etc. And if you really did the switch when you couldn't take it for the Chinese stocks at the bottom and switch it to the FANG stocks, then it's really a terrible disaster. But if you have been watching my videos, you know that throughout this past few weeks, I keep warning about a market correction. In 2022, I said that I expect a correction for 10 to 20% medium term, and that's why accordingly I adjusted my strategy from 20% in short term, 80% in long term to 50% short term. So I increased the short term position because I expect a lot of the volatility in the market, and suggested to keep spare cash in case things get worse. And you can use it to buy the dip. And I said I won't locate this back to the long-term position until I see the market bottom. And right now it's clearly not the case yet. Right now, the S&P is really not looking good for now, but the worst one is really NASDAQ or the QQQ. S&P broke the uptrend on Tuesday, as I said in the last video, because it broke this purple trend line. And after that, you can see it continues selling off. And right now, even though all the indexes are falling together, the only one that's not broken the uptrend yet is Dow Jones. You can see that it's still not making lower lows. It's still a higher low. So let's see if it can hold this support line. As I kept saying that I think this year is going to be a lot of smart money moving their capital from the tech, the NASDAQ to the Dow Jones. It's hard to see right now because everything is falling together with no exception. But overall, you can see Dow Jones still dropping less and the NASDAQ is dropping way more. And for the trading, I said I would mainly go with the Chinese stocks like the CWEB and YINN because I believe the HSI had bottomed, and before the market gets more clear, I would trade with these two that have more correlation with the HSI. And you see recently it's been paying off really well. Recently, very frequent trade. Bought CWEB on this day at 11, took some profit on the same day, buy in again 11 point something, sold at 14 something. And then on Tuesday, enter YINN at the lowest of 8.7 and then took profit this morning at 10 something. I know this is really not the right thing to do to try to time the market, but at this kind of volatile market, I guess this is the only way to protect yourself by not having too many long positions for now. To be fair, the Chinese stocks are still running up quite strong, especially the HSI had such a strong push through the resistance of 245 and push through the 120 MA with strong spike of volume too. So pretty strong momentum. So I'm bullish on HSI, but at the same time, I don't like to hold any trades for more than a few days now. Too much uncertainties. Especially I keep monitoring the fear and greed index, and it's not yet at the fear level after so much drama and the fear spreading about the interest rate increasing and the inflation. just people don't get scared. Everyone is too used to the steady bull market and buy on every dip, right? Yesterday it was even a greed level, and I said on Discord, in what universe are we in greed mode right now? Today the bond yield had dropped 3.5%, all the way from near 1.9 to 1.8. Quite a fall in the day, so you would expect the tech to perform well, right? But no, this is why I always believe the bond yield is just a story made up by the Wall Street to manipulate, and they can say whatever they want. But even on a day like this, our portfolio should be still green for most of us because we are holding a lot of Chinese stocks, mostly green. Even EH had a breakout of 11%, at most 15%. It was the news of getting the pre-order for 50 EH216 from Japan. And it is for the Urban Air Mobility Project to provide air taxi services for the 2025 World Expo in Osaka. Well, this is of course a great news. It means that EHang is more and more accepted internationally and what we believe to be the world leader in this field. So for Japan to order for the World Expo, such an important event, it does say something. When the share price were falling, so many people said EH is a scam. And now, guess what? It's being recognized by other countries outside China more and more. So hope these negative voices can gradually fade away. And I have said in a couple of videos ago that I thought EH were doing interesting price movement. It seems like someone have been accumulating shares at the bottom and today using the news to do a breakout. Hope this can continue and close the gap here to be the strongest resistance now. Luckin Coffee broke out of this trend line and did a little back test today to see if this trend line can hold. If it can, then it's back on this movement within the triangle, and it will show that this past few weeks were a false break of the support. So very important to see if this can hold. So today most of the growth stocks were green. As you can see, I think the Chinese stocks running up so well recently, it's starting to spread to the other smaller caps. So it has to start from the mega caps like the Tencent, the Alibaba, the Meituan, the JD. If those are still lying down, there is very little chance for the rebound for smaller caps. So that's why I chose the CWEB and the YINN to start with, right? And today we start to see more and more growth stocks looking like it has a breakout. But of course, it would depend on the following market, and I mean the US market as well. If Nasdaq continue going down, NIO would go down with it too. And for HSI, it sure looks like it had bottom. A few months ago when many people worried that the HSI can drop so much when the US stocks were rising during a bull market. So they're worried if the US stocks start to fall, the Chinese would fall even more. And back then, I already had the script written. I said that I thought HSI would bottom and then do a reversal rebound. When the US stocks get to the medium-term correction, it would dip with it, but it's a pullback and not make lower lows than December. And until the US stock correction is over, it would be back on the rally. That's the script I wrote back then a while ago. And I still think so. What's surprising is that it can still run up so strong even when the US are selling off. But I don't expect this to be sustainable. I think when the US stock fall harder, it will follow with it as well. Just not the worst. But the fact that I think HSI would not make a lower lows than December lows, it cannot guarantee the smaller caps or the growth stocks to not make lower lows. Especially right now, it's about rising interest rates. So this storyline is gonna destroy the valuation of smaller caps. But for US growth stocks, more than the Chinese growth stocks, because the Chinese ones have been long corrected last year and have limited room to drop. So you can keep that in mind, the script I wrote before, and see if it's true after a few months. So the future market had opened and the falling continued. Just dropped another 100 points. It looks pretty bad, pretty scary, but I think you should have somewhat expected this because I kept warning about the sell-off of the mega caps because it's too hot previously, like the Apple, the Nvidia, the FANG, and so on. Tesla needs to at least correct to 950 50, if not more. Out of all, the worst is Netflix. Last year, people kept trashing the Chinese stocks and think they are useless. But right now, look at the Netflix, one of the mega caps, one of the fangs, dropping 20% after market, 20% at $400. So that means tomorrow you're gonna see a big red bar here. This is beyond skydiving. And it happens for the US stocks, not for Chinese stocks. Anything can happen. Don't think that for a certain period it's hot, then it's hot all the time. And for Chinese stocks, don't think that it falls all the time for a certain period, and then it would not grow at all. Now it's really quite the reversal situation for the two. So Netflix is back to 400 level, which is before COVID. Actually lower than the peak of 2018, which makes sense to me because Netflix is the one I like the least out of the mega caps for the US techs. I think as a mega cap, it doesn't have a strong moat to hold this high valuation. So if you want to buy in a dip tomorrow for Netflix, I would say I won't. If anything, I might buy a put option on Netflix after it rebounds a little bit, because I think it can fall more than this. I think it's going back at least to the 300 something. So is the sell-off over yet? Because it has been dipping for almost every single day. So when is it over? Is it enough correction? Well, in my opinion, I think it's not over yet. Right now we are at a support around 14,000, which is the level at the beginning of February last year, before the correction. So we have corrected quite a bit, and right now we are at a good support. And it is very oversold. So I expect some rebound, but I don't have a high expectation on the rebound. And then it might fall all the way to this range of 12,300 level. This is also the low of March last year. So I think this is a good base, should be a good bottom. And then it would match my thesis for the last video that I think Nasdaq should drop somewhere between 20 to 30% to correct the valuation that's been pumped by the QE. And then rebound from here because suddenly the Fed realized they don't need to raise that much interest rates after all. Then all the retail investors would feel like, once again, we are tricked and believe in those stories from the Wall Street and the media. And within those times, during the rebound, it would have a lot of bad news and media talking about rising interest and inflation. Again, this is just my script. Don't take it as a Bible, okay? It's just what I believe is that the Wall Street always play on these tricks, tactics, spread fears, and so on and so on. And for the timing, I think we have a very bad January so far, and it might rebound in February. Keep going down in March and April, and might see a bottom or reversal in April or May. But again, no one can time the market perfectly, and this is just a script. And don't blame me if I'm wrong, because if I'm wrong, we still have to respect the market. Now, if you want to buy the dip, right now we are at a support level, looking like it's breaking a little bit, and we are very, very oversold. If we look at the QQQ, now I drew this a while ago, strong support at 354. So I think in this range, it might be a good risk-reward ratio to buy the dip and try to catch a rebound with small position and have tight stop loss in case it breaks. Last time I said Russell 2000 might make a golden dip before the bull run in 2022, because I still believe it might have a really good bull run in this year. But before that, we might have a golden dip first. And you can see recently, it just keeps on dipping. Seems like we are really gonna see a good dip for Russell 2000. If it can drop to this level, in the range of the 170s, I would be grabbing the dip for the Russell 2000. And I would even go with the TNA, the triple leverage Russell 2000 ETF. If it makes a golden dip like that, I think the risk-reward ratio is pretty good, considering that I think it should have a good bull run in 2022. You see that it has been staying on the side for the whole year, last year in a bull market for the S&P. So I think it's gonna have a good dip and then a good run after. But of course, when that really happens, it's very hard to counter the fear, as you would hear a lot of the bad news stories made up by the Wall Street about the inflation and how many times the Fed is going to increase rates. And I would just suggest you to block those news and don't believe in anything the Wall Street say. News is always behind, and we don't know how much of those factors, all those factors were true. They are a factor of valuation for stocks right now, growth versus value. It's true, but the only thing is that we don't know how much it has been priced in already for the share price. Because rising interest rate is very bad for growth stocks, the tech, and emerging market. So that's why you can see that the Chinese stock market had been dropping for the whole year last year. And it was not only for the regulation, the crackdown from the government or the Alibaba incident, etc. I think what it is was really the Chinese government were trying to be smart about the monetary policy of the US. They saw it coming that the Fed would change the monetary policy to tighten the QEB, which was planned in 2023, right? But because the Chinese government saw the bubble were getting too high, the assets value were too high, so they were preventing this to happen. So that is why they have been tightening the policy, deleveraging, pressing down the stock market to prevent a systematic sell-off when the US start to increase interest rate. So that's why the Chinese stocks have been well corrected and now would be much more crash resistant against the fall from the US. It's not immune, but much more crash resistant. So you can see the US index have been rising for more than a year. And I believe this is pricing in the rising interest rate. So again, how much of the interest rate rise have been priced in with the growth stocks share price? We don't know yet. So that's why I won't believe in anything the Wall Street says, especially when they connect the interest rate with the stock value right now. So this 2 days for the trade, I have been mainly selling, taking advantage of the rebound and the run-up of the HSI. And because I was worried that it was just a bull trap this morning, so I said I would open a put position to hedge my portfolio for the long ones. And I chose JD to do that. I set it at 118. At 118, it was here, above 80. Still running up like 11% during the day. Strong momentum. Again, #1 ranking in the Nasdaq 100. And after that, it's just got pulled down by the market. Again, this is just a hedge against my long positions. Even if it's a total loss, I'm fine with it because it means my other position would be making much more profit to cover this. But if the market really goes down, then I would be happy to make some money out of the put options. And also suggested the yen. At that time, it was around 15.6. I said it's a hedge, it's an insurance for the portfolio. And after that, it just kept on climbing, continue after hours because the future is down. So it's the China bear. Now, if you wonder, I'm so bullish on Chinese stocks, why would I want to short it, right? Again, it's just an insurance. Because of course I don't want Chinese stocks to go down, but we have to face the risk if the US keep falling. I don't think the Chinese ones can be completely immune. This is very, very unlikely. How many days I have kept on seeing the Chinese stock ranking the top of the list of growing on the Nasdaq 100. Same thing, JD, Baidu, PDD. Over and over again, many days like this. And I just think this is not very sustainable. It's very unlikely they can be completely immune. So that's why I also have a put on PDD as well, even though it's always the winner in the Nasdaq. But the only thing is I bought it too early, bought it yesterday. So now, even though it's down, my put option is slightly down. But again, this is just a hedge. I don't expect to make money with it anyways. LKCO is finally showing some movement. On a down day like today, it can still be up 4%, trying to push this resistance around 60 cents, but it's not a big resistance. Let's see if it can still continue to be immune. And maybe when Nasdaq rebound, it can pick up more momentum after this. Someone asked me what's the next catalyst for LKCO. I would say the next catalyst should be being included in the small caps index, which were the news last year. around summertime. That's why it had some run up after that, because everyone thought the index would include it and start to buy the stocks. So they want to get in before that happens. And after that, they clear out the rumor and said that they can't make it on time, so maybe next year. And if it's next year, they only do it once a year, so it should be somewhere in spring. I don't remember, it's March or May. So I think that would be the next catalyst if it can happen. And this is what I've been waiting for a while. Now that's it for today. I hope you can find this information helpful. Cheer up and don't panic on a down day like this. You can always have other solutions. Add a hedge from time to time so you can feel better when things go down. Now if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you in my next video. That's it guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.